Let's take a look at problem 8-3A, where we're presented the aging schedule for Galena Company. And you see the customers appear in the first column. The total amount of receivables is outstanding, the amount not yet due, and then we have aging columns into 4 buckets: 1 to 30 days old, 31 to 60 days, 61 to 90, and over 90. There's an estimated percentage uncollectible applied to the various columns, and from that we're able to compute the total estimated bad debts. So hopefully you can see on the screen that the total estimated bad debts, given the assumptions about the estimated percentage is uncollectible and given the accounts receivable aging in front of us, is $38,120. And on this problem we're asked to solve 3 separate events, which we'll cover on the next few slides. Let's take a look at Part A. First, the sentence above Part A says, at December 31st, 2009, the unadjusted balance in allowance for doubtful accounts is a credit of $8,000. And then Part A says, journalize and post the adjusting entry for bad debts at December 31st, 2009. Okay, now you see the solution in front of you. We have to debit bad debt expense for $30,120 and credit the allowance for doubtful accounts in the same amount. Well, how did we come up with that number? Well, we know that the total estimated bad debts was supposed to be $38,120, and we already had a credit balance sitting in the account of $8,000. So when we base a bad debt amounts using an aging of receivables, what that means is we have to adjust the final balance to what the estimated bad debts is, or the bad debts should be. So if we started with $8,000 and we have to wind up with a credit balance of $38,120, then the difference is $30,120 that we need to credit. So we credit allowance for doubtful accounts, bringing the estimate bad debts to the dollar amount it should be, and the offset goes to bad debt expense. Therefore, we've got a debit to bad debt expense of $30,120 and a credit to allowance for doubtful accounts in the same amount. Let's take a look at transaction B. Journalize and post to the allowance account these 2010 events and transactions. 1. March 1st, a $600 customer balance originating in 2009 is judged uncollectible. And then 2, on May 1st, a check for $600 is received from the customer, and we've already written it off as uncollectible in transaction 1 on March 1st. Okay, so here's the transactions you see. To write off the amount using the allowance method, we will debit the allowance for doubtful accounts for $600 and credit accounts receivable in the same amount. Now technically we would also credit accounts receivable dash the customer name just to be more specific, so that in our records we would know exactly which customer was being written off. Then on transaction 2, you see that we reverse that entry because now we've collected amount that was written off. So we debit accounts receivable for $600 and credit the allowance for doubtful accounts in the same amount. And then we record the receipt of the amount, so a debit to cash and a credit to accounts receivable. And by the way, every place in the screen you're looking at that says accounts receivable, we would also make a record of which particular customer that relates to. Okay, now let's look at transaction C. Journalize the adjusting entry for bad debts at December 31st, 2010, assuming that the unadjusted balance in allowance for doubtful accounts is a debit of $1,100 and the aging schedule indicates that total estimated bad debts will be $36,700. Okay, with that piece of information in front of us, we should be able to conclude that bad debt expense now needs to be $36,700 plus the $1,100 debit balance, because that's the total amount, $37,800, that needs to be credited to the allowance account to bring its balance to $36,700. So we credit the allowance for doubtful accounts by a dollar amount to bring the total estimated bad debts amount to the amount it should be, $36,700, and the offset goes to bad debt expense, in this case a debit in the amount of $37,800.